Meta just crushed earnings, but with a twist. Big revenue, massive AI spend, and a stock that's rallying. But is it still a buy? Today I'm breaking down the numbers, the charts, and I'll give a 1-year price target you need to hear before you decide if it's right for you. Let's generate alpha. Meta's fourth quarter wasn't just another report. It marked a strategic pivot toward AI and a massive capital expenditure plan. Here's the snapshot. Revenue came in at $59.89 billion, beating expectations of $58.59 billion. Revenue growth was 24% year over year, which is very impressive for a company this size. Earnings per share was $8.88, also beating expectations, which was $8.23. It wasn't all sunshine and rainbows as costs and expenses rose 40% year over year. When costs are rising faster than revenue, we need to be aware of it. Daily active people is a core engagement metric used by Meta to measure how many unique individuals actively use at least one Meta product in a single day. This increased 7% year over year to 3.58 billion, which is crazy to think about. This is almost half of the world's population. As for forward guidance, Meta expects first quarter 2026 total revenue to be in the range of $53.5 to $56.5 billion, which is higher than previously expected. They anticipate capital expenditures to be in the range of $115 to $135 billion. This is higher than expected. According to the company, this is to increase investment to support Meta Superintelligence Labs' efforts and core business. This is a major concern for analysts because the return on those investments remains uncertain. Over the past 5 years, Meta's revenue has grown consistently, rising from roughly $116 billion in 2021 to about $201 billion in 2025, representing healthy year-over-year growth in the 20% plus range. Advertising remains the engine as nearly 97% of revenue comes from advertising. In terms of earnings per share, it has also generally climbed. After a dip in 2022, it increased significantly in 2023 and 2024. However, certain quarters in 2025 were distorted by one-time charges that caused much lower headline EPS figures, highlighting volatility within the year as high spending weighed unevenly on earnings. Let's talk price movement. After earnings, Meta stock popped, but the trend tells a story. On the daily chart, Meta is trading around $716.50. Technically, that's above both the 50-day and 200-day moving averages, which is typically a bullish sign because price is holding above key trend levels. The nuance, the 50-day is still below the 200-day in some datasets, which suggests the longer-term trend only recently improved and hasn't fully reset into a clean, sustained uptrend yet. Momentum is also stretched. The 14-day relative strength index is 74, which is overbought territory, often a signal that the stock may cool off in the short term. Practically, bulls usually want to see Meta hold above the 200-day on pullbacks, while the 50-day is the next deeper support zone if volatility spikes. If RSI stays elevated while price stalls, that can hint at a near-term pause before the next leg. 3 of the biggest risks facing Meta: AI and metaverse spending. Meta is investing tens of billions of dollars into AI infrastructure and reality labs. If these investments fail to translate into meaningful revenue, margin expansion, or new high-growth businesses, profitability could stagnate and valuation multiples could compress. Advertising dependency. Advertising still generates about 97% Meta's revenue. A global economic slowdown, reduced marketing budgets, or rising competition from competitors could weaken ad growth and pressure earnings. Regulatory and political pressure. Meta faces ongoing risks from data privacy laws, antitrust scrutiny, and potential platform restrictions across the US, Europe, and other regions. Fines, forced changes to business practices, or limitations on data usage could negatively impact monetization and long-term growth. Bottom line, Meta's upside is tied to AI success and ad strength, but heavy spending, ad cyclicality, and regulation remain the key threats that could derail the bull case. Now here's the big question. Where could the stock go from here? The average one-year price target is around $835, about 16% upside from current levels. Most analysts maintain a buy rating. This implies Wall Street sees room to run. The bear case, $650 to $700 if costs drag earnings. Base case, $800 to $850. Bull case, $1,000, plus if AI monetization accelerates beyond expectations. As for my opinion, I am giving Meta a price target of $1,000 over the next 12 months. Here are the three main reasons why. First is AI-driven revenue. Meta's heavy investment in artificial intelligence isn't just spending. It's already boosting core advertising monetization. AI-enhanced ad targeting has increased ad impressions and prices, lifting revenue growth and giving advertisers better ROI on spend. That dynamic can accelerate top-line growth and improve margins over time, lifting earnings and investor confidence. Second, I believe in the management team at Meta because they consistently show strong vision, adaptability, and execution. I like businesses that are run by the original founders. Mark Zuckerberg has proven he can make bold long-term bets, then pivot quickly when needed, balancing innovation with profitability. Yes, the metaverse didn't work out as planned, but their other businesses are doing very well. Third, persistent advertising strength and user engagement. Meta's massive user base across Facebook, Instagram, WhatsApp, and other services continues to grow and engage, which fuels its dominant advertising business. With daily active users expanding and ad impressions rising, the company can sustain high revenue growth while integrating new AI tools that further monetize engagement. So there it is, Meta just delivered a strong quarter, but the story isn't over. With big AI spending, evolving user engagement, and mixed technical signals, the stock could swing significantly from here. I personally own Meta shares. This is not financial advice, just my personal opinions. Please consider your own risk tolerance, time horizon, and financial situation before making any investment decisions. Thanks for watching. If you enjoyed this video and want more earnings recaps with one-year price targets, please like and subscribe. Until next time, keep earning, keep saving, and keep investing.